All right, let's dive in. I think today we really want to look beyond, the day-to-day noise, the green candles, the red candles, all that price action, and get at the deeper forces, really defining what has durable value in the digital asset space for 2025.
Exactly. I think the core theme really is that the market is actually maturing. It's not just inflating again.
Right.
And we're seeing the rules of the game get rewritten in, I'd say, three critical areas: market plumbing, the global regulatory scene, and maybe surprisingly, security.
Let's start with that plumbing, because this is where the money is really telling the story. By the end of 2025, the influence of derivatives, it's just staggering.
It really is.
We're talking about something like, what, $27 to $28.5 billion in notional value for Bitcoin and Ether options set to expire.
And what's really fascinating is where that exposure is centered. There's this huge concentration of open interest in calls right around the $100,000 strike for Bitcoin.
So that's the crowded trade we keep hearing about.
That's the one. And it fundamentally changes how you have to look at the market. Your directional view is incomplete now if you don't get derivatives.
How so?
Well, volatility is now a function of gamma exposure. It's driven more by how dealers have to hedge their positions than by, organo spot market sentiment.
So for our listeners, does that mean analyzing spot volume alone is basically looking in the rearview mirror?
It means spot trading is rapidly becoming the residual. It's the effect, not the cause. You're looking at the market's wake, not its engine.
That complexity seems to be running parallel to the complexity of the threats. The sources we looked at confirm the dark side of this is also industrializing.
Oh, absolutely.
They're estimating stolen assets could hit, $3.4 billion for 2025? And crucially, these aren't just lone wolf hackers anymore.
No, not at all. These are sophisticated, state-aligned actors. Many of the big heists are being traced back to groups linked with North Korea.
And that must change the calculus for any business in this space.
Completely. Security isn't just a cost center anymore. It's a non-negotiable for any kind of institutional buy-in. They demand robust key management, clear compliance.
It's a competitive differentiator now.
It's a trust engine. Without it, serious capital just stays on the sidelines.
Okay, so from institutional trust to institutional clarity, let's talk regulation. It feels like we're finally moving from regulation by enforcement to something more proactive.
Regulation by design, that's the phrase. And look at the EU MiCA is fully operational now. That means clear licensing, clear market standards. It looks a lot more like traditional finance.
And this is a global thing, right?
It is. Australia is a really interesting case to watch. They're moving away from their patchwork of rules with this proposed corporations amendment bill.
What does that do?
It basically brings all digital asset platforms under their main financial services licensing regime, the AFSL.
Yeah.
It's a clear signal that they want to be a properly regulated hub for the Asia Pacific.
And that kind of clarity is what lets the real heavyweights step in. I saw one of the biggest drivers is that the Depository Trust Company, the DTC in the U.S.
The backbone of U.S. securities settlement.
They're actively running tokenization pilots. That feels huge.
It's immense. It means tokenizing real-world assets. The RWA narrative is no longer a DeFi thought experiment. It's here.
But that's a double-edged sword for the crypto-native builders, isn't it?
It absolutely is. Because now you have these powerful incumbents entering the game who already own all the settlement pipes and legal frameworks. The bar for purely decentralized infrastructure just got a lot higher.
Okay, so finally, let's touch on how firms themselves are using crypto. We're seeing this trend of digital asset treasury companies that are structured almost like leveraged Bitcoin vehicles.
The MicroStrategy model, yeah. Raise fiat through equity, use it to buy more Bitcoin.
Right.
And that raises a really critical question for any investor. At what point does that strategy create real shareholder value versus just amplifying volatility?
You have to ask if you're buying a tech company or a professionally managed Bitcoin fund.
Exactly. For some of these companies, Bitcoin has gone from being a treasury hedge to being the entire business model.
So we tie this all together, the main conclusion seems to be that digital assets are no longer in their own little sandbox.
Not at all.
They're being woven directly into geopolitics, into legacy market plumbing, and onto corporate balance sheets.
Right. So the action item for anyone listening is clear. Position yourself around these structural shifts. That means you have to integrate derivatives data, you have to assess jurisdictional risk, and you have to demand a high security posture in your due diligence.
Those are the frameworks that will last.
They'll persist long after this particular price cycle is a memory.
Which leaves us with a final thought to chew on. If traditional infrastructure, like the DTC, starts to settle tokenized assets efficiently within all the existing legal frameworks. What's the unique competitive advantage of purely decentralized crypto-native infrastructure? What new value must DeFi create to stay relevant?